Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Some bit of a modest gain, and then seems like Hang Seng has given up those modest gains as well.
Charles Schwab, of course, is the leader there, and that was down about 8% or so.
Royal Enfield volumes are up 21% year-on-year. Even commercial volumes have increased by 24%.
25,970, so it's up, but not holding straight away.
But broader point here being, since this sector is regulated, there are multiple aspects of risk to be taken into consideration.
There was an extra 8% volume increase from insurance with a 20% revenue increase.
In the rising gold price scenario, margins of jewelry business do see a little bit pressure.
Definitely, we had highest ever quarterly revenues and good profitability.
Today again, we're seeing the rupee appreciate further in trade, now trading at 90.5 to the dollar.
Base size is 3%, and the green shoe option, if government decides to exercise that, for that it would be 3%. Mahindra Group has reported revenue of more than 50,000 crore for the first time ever. That's the consolidated revenue.
A 60-point cut from the highs of the day. The mid caps are sulking, though they have recovered a tad bit, but again, there are more stocks on the declining side versus advancing side.
Okay, it's quietened down after 2 days of a decent move. This Wednesday, things are not on the back foot, but 18 points, 25,950, almost exactly where we left off yesterday, which basically means that if we end here, it's not going to be a bad outcome, but 26,020 is the level we want to get above. We'll see if that happens. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima and Nigel with me. Guys, good afternoon.
Hi, good afternoon. Facing a bit of a hurdle around that 26,000 mark. So we've slipped a bit from the high point of the day, close to about 70 odd points, but flat now. The Nifty IT is the problem. Nifty IT index is down nearly 1.5%. So while the Nasdaq has recovered globally, the Indian IT, the selling pressure here continues. So at the low point now.
Well, that's right. Some kind of consolidation. We have had a good run. Par for the course, I would say, right? Some quietening down. Only today the number of stocks declining is more than the number of stocks advancing. But I think that's fine. We've had quite a few days of outperformance. So pretty okay.
And mid-cap, small caps also, even though we're consolidating, it's just consolidation. It's not that it's losing ground or seeing.
Your tech stocks, Rima.
Tech is the problem. Yeah,
every now and then, this tech stocks. Anyway, hopefully you get your act together, Rima.
Such disdain, Nigel.
Look at my metal.
Directed at me.
Just look. This is all on look at the metal stocks. I mean, they have had such a good run. There was a period when metals, they were down. And the tech stocks were up.
Sabka number aayega na.
Sabka number aa jaya. And like right now, Rima's done with the results a long time ago. I'm the only one who's waiting.
Oh, your numbers are...
Yeah, Rima starts...
still came. Some are left.
Yeah, Hindalco and Coal India. And
tomorrow.
And this Friday evening, ready to celebrate Valentine's Day.
Okay, well, it's an action-packed day. Let's just quickly run you through what's lined up here. Markets, of course, gyrating a bit. Key indices are witnessing a choppy session. Mixed move across sectors and tech counters under pressure. PSU banks and autos are trading firm. Mahindra, of course, numbers came through just now. Ashok Leyland has sold off from the highs. Eicher in the spotlight. Solid third quarter numbers. Some fine print here. Jubilant Food, of course, is down despite a strong showing in the December quarter. Britannia is higher on the back of a 450 basis point margin expansion in the quarter. So it's earnings, and more earnings. Why is Motilal bullish on Premier Energies? We'll tell you the rationale behind that. So that's coming up here all in the next 1 hour on Closing Bell. How should you position yourself is the question in the last hour of trade. Mitesh is with us. Mitesh, good afternoon. Good to have you here. So it's almost 3 points left now. And, the yesterday's close kind of sort of, in a way, open and close around the same levels. A bit of exhaustion setting in, Mitesh?
Yeah, quite possible that, some tiredness is coming. We're not getting past 26,000 convincingly. Talked about that as an important level. Not only there's some options data would suggest that, but it's a round number, and as well as it's an earlier pivot on the intraday charts. So maybe, as I said, take some profits over here, wait for a dip to come in. Otherwise, in case we start capturing 26,000, then we have a chance of getting towards 26,250, 300. But for the time being, the initial feeling is that taking part profits will not hurt, and it will be a smart strategy. For the time being, the stock calls that I have, and after a long time, I have a sell call as well. I have a sell on IDFC First Bank with the stop at about 84.25 for targets of 79, and Exide is a buy with the stop at 335 for targets of 352.
Got that. Just put the spotlight on the frontline IT names. TCS down 2.5%. Infosys sliding 1.5%. Over a 1% decline coming through on HCL Tech, while Wipro, LTI, Mindtree, Tech Mahindra also in the red. So it's a very disappointing session. And it started flat at an index level and it continued to gravitate lower and finally now at the day's low. But let's talk about the good part of today's trading session, and that's the auto stocks, particularly a stock like Eicher Motors, which is the top Nifty gain, a 6.5% on that. It's a fresh 52-week high. Sudarshan joins in with Eicher Motors and the other auto sales numbers, auto earnings that are out today.
So it's largely been a good day for majority of the auto companies which have reported earnings so far. So three major names, Mahindra & Mahindra, Eicher Motors and Ashok Leyland, are in the focus on the back of the earnings of Q3 FY26. And all these companies either have reported earnings which are largely in line or say better than expectations. So we'll start with Mahindra & Mahindra. An Argo company has come out with Q3 FY26 earnings. Both the segments, auto and farm segment, have been seeing healthy volume growth. It was up 23% YY in Q3 FY26. That has helped company to report a double-digit revenue growth. On the consolidated basis, Mahindra Group has reported revenue of more than 50,000 crore for the first time ever. Now, on the standalone basis, profit was up 33%, revenue has increased by 26%, EBITDA too has seen a jump of 27%, and margin was in line with expectations and has come at 14.7%. Going forward in FY26, company is expecting tractor industry to see a growth in the range of 20 to 24%. Even SUV is going to see a healthy growth because the demand for the recently launched vehicles remains strong. Coming to the Eicher Motors, top Nifty gainer, up more than 6%. On the volume front, company has been doing good, but on the margin front, there was a concern till Q2 FY26, but in Q3 FY26, margin 2 has come in at 25.5%. That's at a 5-quarter high, and after several quarters for Eicher Motors, EBITDA growth has outperformed both volume growth and revenue growth. And on the back of strong volumes for both Royal Enfield and commercial vehicle, revenue for the company has increased by 23%. EBITDA has seen a jump of 30%, and margin, as I told you, it has come at 25.5% versus 24.2%. And going forward in Q4 FY26, company is expecting strong demand to sustain, and even in FY27, motorcycle industry is expected to see a high single-digit growth. Coming to Ashok Leyland, it has come out with its earnings. CV volumes have been strong, and majority of the companies have been saying that the CV is in up cycle, and in Q3 FY26, Ashok Leyland has seen volume uptick of 24% YY. Even on a sequential basis, there was an increase of 17%. And despite a sharp increase in the raw material cost, company has reported an increase in the gross margin if you compare YY. But on the back of strong volumes, revenue has increased by 22%. EBITDA has seen a jump of 27%, and margin has come in at 13.3% versus 12.8%. Stock has seen a downtick after the earnings, but remember, after Q2 FY26, in the last 3 months, stock has seen an up move of more than 50%.
Thank you very much for that. Siddharth Khemka, Head of Research, Wealth Management, Motilal Oswal Financial Services, is now joining in. Siddharth, what are you recommending in the auto pack? Post the numbers.
Yeah, definitely. Hi, good afternoon, Rima. So if you look at, I think Mahindra & Mahindra came out with good set of numbers. That has been among our top picks in the auto sector for quite some time. In terms of overall earnings, revenue grew about 26%, in line with our expectation. Overall, EBITDA margins was up 100 basis points, and adjusted PAT grew 35%. What we believe is that while the tractor volumes continue to remain pretty strong, the company is also showing good traction in the passenger vehicle segment with its EV business picking up. Valuations remain pretty good, and I think even at these levels, we see at least 15-20% upside for a strong rural play in M&M.
Okay, so M&M is the preferred pick. What about Titan? Titan seen some profit booking after hitting record levels. Numbers were strong, 40% plus jewelry revenue growth. Stock was up 5% yesterday, so today it's cooled off a tad bit. But is it on account of valuation or the fact that if prices continue to remain at this level, volumes are anyway on the flatter side. The buyer growth has been flat. So where will the top line come if gold prices don't surge?
Yeah, I think on the headline numbers, pretty strong numbers from across jewelry names, including Titan. So stellar growth, profitability was pretty strong. Volume growth is something, as you rightly pointed out. I think once we see some cool off or at least stabilization in the gold prices, volume growth will come back because a bulk of business is driven by marriages, and that we see that is a continuous structural uptrend in India. We believe that within the jewelry segment, Titan continues to be the market leader among the with the large nationalized presence, and they continue to gain market share. The other than jewelry business, also the eyewear and the other segments, that is also seeing good growth, 20% plus growth in terms of business revenue. I think all round super performance, a bit of profit booking, but we remain positive on the entire jewelry segment, and Titan being a preferred pick there. We continue to maintain a buy on dip strategy on Titan with a target price of 5,000 rupees.
Yeah, no, absolutely. I just want to talk about Apollo Hospitals, right? The stock, of course, is one of the big gainers, has been from the word go. And we spoke with the management earlier today. They sounded bullish on, of course, the prospects. Just want to play out a quick soundbite in. Listen in.
So there was an extra 8% volume increase from insurance with a 20% revenue increase. So this will continue, and with this, we should be able to get higher occupancy metrics. Insurance enabling patients to enter the Apollo system for robotics, for transplants, improvement in cardiac work by 20%, onco work by 18%, orthopedic 17%, and gastro 17%. This has all led to a higher ARPP. Insurance improvement is about 5% total volumes. If moving up from 43 to 48% now come from insurance. Can we continue with the ARPP of 11%? I think, we started from a little bit of a low base effect, and we've moved to this number, therefore showing 11%. Will this continue? I think it could probably continue in the range of 5 to 6%. But what will improve is volumes. And when volumes improve, operating leverage and therefore absolute EBITDA and profitability will continue to improve.
This was, of course, about Apollo Hospitals, but let's just pull up the Indraprastha Medical stock up, right? I think it perked up almost at the time that the management was on air, the Apollo management was on air, and it's still holding with gains, about 5%. The surge that you see came through when we asked the Apollo management about what their plans are. They own 26% in Indraprastha Medical. The Delhi government owns another 26%. The buzz for a while has been that Apollo essentially wants to increase its stake in Indraprastha Medical and perhaps eventually down the road, consolidate Indraprastha earnings. And it's a well-functioning, highly profitable, debt-free company into the Apollo accounts. So that question to the Apollo management, and this is essentially what Sunita Reddy told us. She said, and I quote, "We continue to have a very collaborative dialogue with the Delhi government. Bit early to comment, but we are both hopeful of a very positive outcome. We do feel that we would like to do more in Indraprastha." Let me just end with that. And very soon we would probably be able to talk about how the contours will look like. So that is very specifically about the Indraprastha medical situation. Rima.
Okay, all right. Got that. Sid, wanted to ask you about a couple of other names then. HEG, have you had a look at that? The numbers look quite good, but the stock has fallen off the cliff after starting up 5%. It's down 5% right now. You had a look?
Hi, Nigel. So we had a look at HEG numbers, pretty strong numbers. Unfortunately, not under coverage, so did not have a detailed analysis. But I think some bit of profit booking after this rally that we have seen in both HEG Graphite in anticipation of the strong numbers. I think as you were discussing earlier, metals as a pack has been doing well, and this is an ancillary to that space. So I think the outlook also remains pretty strong for both HEG as well as graphite.
Got it. All right. What about any of these other stocks? Have you had a look at them? TVS Supply Chain stock is now up close to 16%. Big move is what we're seeing on that particular name. Any view?
So again, another name we don't have coverage on, so we'll not be able to give a view.
Vodafone Idea? Mr. Bidla has been buying quite a few shares in the last 10 trading sessions. Even an update that's come yesterday on the exchange is saying that he's interested. Are you interested though, Sid?
So yeah, if you look at Vodafone, we have been a bit negative while there has been some relief that has been given by the government. I think a lot of things need to be done on the debt side before one can turn very constructively positive on that. I think valuation-wise, pretty good. It needs to be now seen in terms of how well they are able to manage their market share. They have been consistently losing active subscriber base. The debt burden that is pretty strong. And the latest relief that has been given, I think the clarity in terms of how the AGR dues can get capitalized over the next few years, that needs to be seen. Bharti Airtel is our top pick, preferred pick there. We upgraded Bharti Hexacom after the results from a neutral to a buy. We believe valuations are now attractive. They were earlier trading at a premium to Bharti Airtel, and hence we are downgraded. Post-out downgrade, the stock underperformed by almost 18%, and now valuations looking attractive. We believed both Bharti Airtel and Bharti Hexacom could be the preferred picks in the telecom space.
Okay, all right. Sid, I wanted to ask you about these recyclers. I think you'll have coverage on Gravita, if I'm not wrong. And today we had a recycling segment, from around 10:30 a.m. to around 11:30 a.m. We had Gravita detailing their foray into the copper segment, the recycling segment out there. The street was looking at aluminium and other products, but they went for copper. They've given us their rationale. The stock has recovered from the recent low, though it's a far cry away from the recent high. Any view on that name? Ganesha Ecosphere, the stock is up more than 20% in this week, but it's a third of what it was at its peak. And also we had Gen Resources, the newly listed company. All of them are saying that there's a longer pathway ahead, but are you interested in any of these three?
Yes, we do have coverage on Gravita among the three names where we have a positive view. I think overall recycling business, that looks pretty good and attractive. Some of them, for example, Gravita is now also getting into the copper recycling business, which should be an added growth trigger for them. But you have to look at these kind of companies from a long-term perspective, given that they are largely dependent on the government policies, and you have someone like a Trump sitting in US where he's not that focused on in terms of the renewable energy, recycling, carbon, green energy. So I think that kinds of puts a bit of an overhang on the space. But structurally, we believe that this is a space that should the entire ESG theme, both renewable energy as well as recycling business, that should do well, which is where we have also released a new report or idea on Premier Energy, which is at the foremost renewable energy business company in India, fully integrated, doing a lot of capacity expansion and also valuations being attractive, and hence we believe it's a good opportunity to add something like a premium energy at the current market.
Siddharth, I know towards the end of November, Motilal Oswal had upgraded Indian IT sector to an overweight. And again, you all had cited, the index had underperformed, valuations are now attractive, global AI hyperscalers are experiencing diminishing marginal utility from infrastructure build-out, which means there will be a shift towards application and services layer. But now that entire thesis is getting, questioned, whether the application services revenue will be as much, the integration maintenance will be as much as what the analysts were expecting, and IT stocks have taken a big beating. At Motilal Oswal, are you rethinking this overweight call on IT services now?
So yeah, Rima, so thanks for pointing out that was a good report. I think it's too, again, from a futuristic perspective, we are looking into the ahead and trying to evaluate whether Indian IT companies can play the role of providing the application services for AI, which is where some of the Indian IT companies, for example, Infosys, HCL Tech, Tech Mahindra, they have built on the AI suits as well as started delivering services on that front. We believe, yes, there is definitely a scope for Indian companies to start delivering on that front, but this is a developing technology. We need to continuously keep evaluating how things are changing, especially in the AI front, where growth is not linear but more exponential. Right now, we definitely have that view, but more from a next, you can say 1 year, 2 year perspective, we believe that Indian IT companies, they have shown that resilience in the past as well, trying to redevelop their product services to suit the latest in terms of the requirement. And hence, we believe that the Indian IT companies would be able to provide those services, applications where IT infrastructure, so AI infrastructure investments has happened, but the service applications would require some help. Definitely, AI will help in improving the efficiency. Maybe the job requirement may not be that much, but in terms of delivery, we believe some of these names, for example, Infosys, HCL Tech, could do well over the next 2-3 years.
All right, Sid, we have a common interest with regard to two-wheelers. That's the Royal Enfield. I think you have been thumping for the last many years, and me too as well. That's the only bike I ever owned. That's that discussion for another day. But what about the stock? It was expensive. It is expensive. It continues to remain expensive, though the street likes the numbers, and now they're showing confidence. They're going ahead and adding capacity as well. What's your view on Eicher Motors from here on?
So yes, I think we do share that passion for riding and thumping the Royal Enfield, and hopefully we should ride some day together. With regards to numbers, pretty strong numbers. Outlook, I think management commentary sounded pretty strong, positive. Margins continues to remain pretty strong. But however, we believe that going forward, that growth could get a little bit under pressure, especially if you see after this initial surge, especially in the pent-up demand now. That even the government has allowed the FTA agreements, the trade agreement with US, Europe, some of these imports from Harleys that could impact in terms of volumes. So overall, we believe valuations are on the higher side, and hence we have an underweight view on Eicher. Nonetheless, the company continues to outperform, but purely on terms of valuation and in terms of growth declining going forward, our growth estimates, especially for FY 27-28, is in the range of 10 to 12%, based on which we believe that valuations could be attractive. It is a good time for booking profits in Eicher and moving into some other IT names, including TVS Motors, Ashok Leyland, and M&M.
Thank you very much for that. Let's talk about Jubilant Food and Britannia. So Britannia held their conference call earlier today. It started at 11 o'clock. So let's find out what they said and more about Jubilant Food as well. Vinny joins in with the details.
Hi, so absolutely both these stocks are in focus today. Let's not forget, firstly, Britannia, the CEO, this is his first call that's come in as well. He took charge on 15th of December. That's Rakshit. So that is the first, a new CEO, his first call that came in. Now, in terms of numbers, obviously it was a good set of numbers. We've spoken about that through the day. Con call highlights. What did they say in terms of commodity prices? They said that the commodity prices have been largely stable for the company. So in terms of margins, if the commodity prices are stable, that means margins also likely will not see a major impact coming in. Now, they said that they've upped their investments in terms of brands, and they continue to expect this number to keep going up going forward as well. So investments in different brands, that's what their new focus and strategy is. Sales growth, they said that, obviously we've spoken about this, that 12% sales growth that came in November and December, both the months which saw better growth than October, which was disrupted by GST. That was only not any channel filling or, stocking up. Not 12% growth, it didn't include that. It was a pure normal business growth. So demand was good for them in November and December. Regional players, regional competition, they said that is a concern that comes in. They've spoken about it in the past as well. Regional competition has been increasing, but it's not specific to Eastern region. Eastern region, higher competition is there, but across the regions and regional players, they are seeing an increase there. Though in terms of national competition, national player competition, they have still managed to see a market share gain in the last couple of years. So they're not too worried about that. They have new strategies that are coming into place as well, which they are focusing on to, fight with the competition in terms of the regional as well as national players. Jubilant Foodwork, a good set of numbers, obviously from the company that have come in. Now, they've reiterated their outlook, 5 to 7% like-for-like growth for Domino's and 15% standalone growth with 15% pre-Ind AS growth they're talking about in terms of EBITDA margins. Now, what the company has also said that the company does not see any headwinds for this like-for-like growth. They're not worried about like-for-like growth moderating due to the high base that one may see coming in as well, and are not worried about their margin guidance. So they're holding on to their guidance as well. And post that, brokerages like Jefferies are maintaining their buy call. Target price is 850 rupees. CLSA continues to maintain its hold call, as well as HSBC also continues to maintain their buy call. So everyone's been steady in terms of their call for Jubilant Foodwork. No change in terms of target price as well.
Thank you very much for that. We will slip into a very short break. On the other side, we'll invite Jigar Mistry of Buoyant Capital. Stay tuned.
Okay, well, I mean, absolutely flat. 15 points higher on the Nifty, 25,950. By the way, Medicure, if you can pull the stock up, we had the management with us in the morning. Stock's down 6%. Actually, the big fall happened right after the word go. And it just kept going. And just look at, the high was late last, actually November of 2024 was the high, about 3,300, 3,400. And about 1,400 now, under 1,400 as far as the price is concerned. This is, in terms of medical equipment, etc., fits one of the only players which kind of fits the import substitution theme in that space, listed space. But it's gone one way. Nigel?
Yeah, the problem is that these Chinese imports are coming in there. That's what's hampering the domestic market. In the UK market, there's a lot of inventory in the system as well, which is hurting them. And this year, obviously, the guidance has been scaled back numerous times. So, you put all of that together, number of dialysis machines as well, they have scaled down by close to around 100. So, all those pockets where there was supposed to be big growth, that's not coming about. In addition to that, there is inventory in the system as well. So that's why a lot of uncertainty. That's why the street is not very, very excited. I think from the day of their numbers, in fact, the stock is now down, I think, in the last week or so, 10 days, I think it's down close to 20%. Yeah. And that's one of the only plays actually you have with regard to medical equipment, and yet it's getting sold into. Has been a big wealth creator over a longer term.
Have they, Nigel, we spoke with them. Have they said they've asked for Chinese imports to stop?
So they
have made an appeal.
They told us yesterday on CNBC.
So they said that China has been dumping in India in the renal products business below the import price also. So that is a problem. Therefore, they've scaled down the business, but they have formally reached out to the government and for some sort of a protection. Yeah. But I think that will be the big trigger.
And though we had the management, they were guiding for better times in 27. But for the time being, the street is saying it's too uncertain because the guidance was very strong. For the next year in FY27, they're talking about 25% growth. On the exports front, they're talking about 12 to around 15% growth. But the street is not buying it because they're saying too much inventory in the system. There's a problem
US
with
is also nothing for them.
Well.
I think some 5%.
It's a very small proportion, but they believe there's a bigger runway out there. But clearly, one of those darlings, if you take a look at it from around 2020, 2021 till around 2024, it did very, very well. And now, in fact, it's coming for some selling.
Basically 1/3 now in terms of the price from the top. Jigar Mistry is with us, co-founder Buoyant Capital. Jigar, good afternoon. Good to have you here. I mean, you can get the theme right and the stock wrong. I don't know. I mean, maybe it's the wrong paraphrasing of the situation in this one. But what's your sense? I mean, with something like this?
Yep, Prashant, we used to often say the operation is successful, but the patient is no more. Not obviously in this context, but sorry, we don't really track this stock or own it for that matter. So no views on the stock per se.
What have you been doing, Jigar? Give us a flavor, a micro flavor, not a top-down, but a bottom-up flavor of where you've been active, what you've been doing, what has Buoyant been doing?
So largely we are a top-down fund, Prashant. So a large part of what we do stems from how we see things from a top-down perspective. But over the past, I would say 3 odd months, we have increased some exposure to small cap, which in November was, at the absolute low, since the inception of our fund in 2016. So obviously the corrections we have used a little bit to dial some risk up. The way we see things, frankly, there were two broad issues, right? One, the rupee was not helping, which was a circular loop, because the more FII sold, the more rupee worsened, and the more rupee worsened, the returns when denominated in their home currency became even worse, and then they sold more. So hopefully the deals put a stop to that. Rupee sort of improved a little bit. It was oversold, but again, it's sort of inching closer to those highs again. The other part is that the phenomenal wealth transfer that has happened. We counted it to almost close to 6 lakh crores, which is 1.7% of GDP. And from that standpoint, people were waiting and are still waiting, I guess, as to when that starts showing up in the listed equities volume growth numbers, right? Because on the one hand, the capex from state and center has slowed down. The money has been given in the hands of people. And if they are not spending either, which is sort of what is apparent from 3Q numbers, which is all single digit growth, then people have started wondering on where this is essentially going. So I think once the market solves that conundrum, and I think 4Q can be a reasonably good guide when the volume growth returns back, then I think we'll move out of this very tight range where, like a action-packed week is then followed by a very mundane one.
Okay, all right. Hi, Jigar. Good afternoon. Good to see you in. Jigar, give one stock. One stock with due disclosures. Something new that you'll have got into or something that you'll had that you'll have topped up. All disclosures, regulators will be happy to hear as well.
No, Nigel. So frankly, all that I would want to, stocks is some things we don't really discuss about. Themes, obviously, we can talk now. Themes, clearly the one big theme getting into this was the fact that commodities became a very large sort of play for us in between. But we have substantially pruned down exposure there sort of over the last month or so.
Commodities, so ferrous and non-ferrous, you'll have taken some money off the table is what you're telling me.
Yes, substantially taken it over, lowered the exposure there.
The conglomerate, which is a tricky one, on that one as well, that worked very well. I recall you were telling us that you'll have exposure to this commodity play, which has exposure to a lot of commodities. That only can be Vedanta. Mr. Agarwal has done things in the past that sometimes give investors nightmares. But this time around, it's made plenty of money. So you'll have taken money off the table from there as well?
So see, essentially, it is continues to remain an anti-dollar play, right? But at the end of things, Nigel, the fact is that if you look at the price in which gold and silver sort of oscillated, that essentially is a very big move from a behavioral standpoint. Now, fundamentally, you can't put a number to what that fair value of a gold and silver is, right? Copper, you have a cost curve, you have demand supply. You have some fair value where, say, 70-80% of the production cost curve will make money, and you can create a long-term picture there. With precious metals, parabolic moves, make them less as a store of value, increases anxiety. So once that starts happening, you are finally feeding it into a belief system where, stocks start reflecting spot prices. And when that happens, that has traditionally been a source for us to reduce exposures there.
Okay, all right. By the way, the T20 World Cup is on and it's quite interesting. South Africa and Afghanistan, they played out, they tied 187 each. You had a super over and both of them scored 17 runs each. So now we're having another super over at play. Just thought we'll update our viewers on that front as well. Interesting times with regard to the T20 World Cup. Jigar, what about this India-US trade deal that's been announced? Any opportunity? Textiles has rallied, but they've come out drastically from the top. Now you have a bit of a worry with regard to what's going on in Bangladesh. They as well managed to get a deal going. Textiles, chemicals, auto ancillaries, some of them could be potential beneficiaries. Some theme you'll have picked out from this deal?
One big sort of theme, Nigel, is basically how that, as we discussed, how that stems the fall of rupee. Now, over the past, I would say a year, a little more than a year, rupee has depreciated against a depreciating dollar. So that is sort of very tricky situation for a country to be in. And if that stems, then I think that's a big win out of the situation. With regards to specific, we used to export like 2% of GDP, 1% of that was impacted. And therefore, from a GDP standpoint, it was not such a big deal, really. But what it does to a few micro industries, textiles, gems and jewelry, carpets, it's a big deal for a few of those sectors. Our understanding of what happens with Bangladesh still is that eventually, see, they might have to get into the US sort of cotton and yarns for them to effectively get a lower import duty. But when you adjust it for the fact that the prices are a lot more expensive than India, plus there is logistics involved, the net benefit essentially is not that large. So we don't really own a lot of textiles or gems and jewelry or carpet, but I don't really see that big of a challenge for the Indian counterparts should somebody be holding.
Got it. Okay. All right. Thanks a lot, Jigar, for joining in and giving us your view. We look forward to chatting up with you rather soon. Well, the markets have taken a bit of a leg up actually in the last few minutes because the Nifty Bank has stood up and said it's time to party. The Nifty has moved gradually up, but the Nifty Bank that was trading in the red, that's now moved to the high point of the day, and that will have to really lead the way from here on. Let's tell you what's going on in the F&O market. The PCR, that's holding at around 1, par for the course, one would say. Options data, 26,000 call, that's fairly active. That's a bit of a resistance zone, 26,050, 26,100. That's going to be the level that the bears want to defend. 26,100 is the level that the bears will come to fight. On the downside, though, the 25,900 put, that's seen a good amount of addition. And there is writing being seen on both those two strikes. So in the near term, since the 25,900 put, the premium was around 150 rupees just a few days ago. That 25,750 becomes important. That means 25,900 minus the 150 rupees you're getting for writing that particular strike. So that's why that's an important mark, and the 50 DMA as well comes in that vicinity. SBI came out with a very good set of numbers, but the stock already had ran up a little bit. Now today you're seeing genuine buying, both in the cash market as well as the F&O market. So fresh long addition being seen out there. Vodafone Idea, the stock is seeing a bit of a short covering bounce in trade today. The promoter entity coming in there and creeping in. The street likes that. PG Electro Plus, another stock that's seen a big correction from the top. But it seems to be getting its act together. At least that's what Mr. Gupta told us, that the PAT number should be around 300 crores and FY27 should be more promising. So a bit of a squeeze being seen out there. And Federal Bank, the street waited by to hear about that fundraise. That fundraise came about, and from there, the stock has actually given you close to around 20% return. Fresh buying being seen on that counter as well. For the time being, you go into that break, come back. Nimish is waiting for you on the other side. He'll tell you what's going on in dealing rooms. And we'll also get you some technical calls. Don't go anywhere. Welcome back. As promised, Nimish is standing by to tell us what is he picking up in D-Street chatter. Nimish, what's up?
Hi, Nigel. Another quiet day today, but the momentum in the broader markets continues. So again, a day when the mid small cap index is up another 1.5%. And in general, there is a momentum which is playing out in the broader market stocks. From a flow perspective, another day of positive flows is my sense. In fact, there is a small MOC basket as well at a leading FI desk. Two themes are emerging of late, Nigel. One, a strong reaction to earnings on either sides. And two, now that the earnings season is getting over, the block season is going to start, and you're going to hear a lot of blocks in the days to come. So that's clearly playing out, and will emerge further as we go ahead. The only index which is under pressure today is the IT index on back of selling pressure. The index is down nearly 1.5%, and there is genuine selling in the IT names is my sense. So again, a day of consolidation on the Nifty, but the momentum in broader markets continue, and looks like there is a bit of chase now happening in the small and mid cap names.
IT index now was 1.5% lower, now 1.8% down. Just continues to grind down.
Nimesh, in terms of chatter, what are you picking up?
So the first name is Keynes Technologies. For second day running, that's buzzing in trade, up almost 10% in last 2 days. And I understand some large HN investors have bought after the clarification from the management. So that's the reason why it's been buzzing in the last couple of days. The second name is NetWeb. I spoke about in the last couple of days. I highlighted Bharti Airtel, highlighted Nuvama as well. I understand there's going to be a large block in NetWeb as well in the days to come. The promoter entity could be a potential seller in NetWeb, so watch out for that. The third name is Anupam Rasayan. Again, it's buzzing in trade today on large volumes. We were the first to highlight that they're going to acquire a company overseas. That's been done. Now the buzz is that maybe they're looking for a domestic acquisition as well. So that's the buzz as far as Anupam Rassayan is concerned. And the last is Telecom. While there is an open offer going on, but I understand a leading AIF is an active buyer in Telecom at current level. So that's the last name on my list today.
Yeah, no, absolutely. On Keynes, Nimesh, are you picking up? I mean, what's the numbers came? We had the management with us as well, right?
Yeah.
But anything, you said there's a active HNI who's buying, but reasons? Anything you're picking up?
So I guess suppose the call, there is a bit of comfort that in Q4 there would be some sort of, comfort in terms of the working capital as well as in terms of orders as well. So I guess the management actually was part of some of the conferences as well. So they've met a lot of investors off late, and especially a couple of large HNIs have bought, is my sense, as far as Keynes Technology is concerned.
And NetWeb, Nimesh, it's another name, right? Which is this.
Yeah.
Next week, by the way, NetWeb will be in focus. The AI summit in Delhi, and NetWeb is one of those AI players in India. So, right, nicely timed. If that is even beyond them, on the bankers' minds. But yeah, go on.
Looks like, Prashant. And see, again, as I said, now that the earnings season is over, the window is opening up for a lot of the promoters to come out and sell. That's the case going to be with Bharti as well. Singtel is a likely seller there, which the block can come any day. Highlighted Nuvama as well. Again, the private equity investor is likely to sell a large chunk there. I guess it's more to do with the fact that now that the earnings season is over, the cool-off period is done, which the promoters can come and sell some stakes. So that's the reason why you're hearing a lot of block deals off late. Bharti, whether it's NetWeb now, or for that matter, Nuvama as well.
Just one more last thing, on Anupam Rassayan, Rachna, our colleague, had reported that FMC India is on the FMC Global is a US company, and the India business is being sold, and the companies like Dhanuka, etc., are in the fray. I mean, the domestic acquisition by Anupam, I mean, is that the name? Are they also throwing in there or no?
I am not too sure whether they're throwing their hat for this particular company, but there is one domestic player which they've been eyeing for a while now. Looks like that could be around the corner, and they may announce something.
Listed, not listed?
It's listed entity.
Okay, all right. We'll leave it there.
Thanks.
We'll
if you ask me anything more, maybe I'll mention the name as well. So let's leave it there.
Okay. All right, Nimesh, thanks very much for that. So that's Keynes, NetWeb, Anupam, Telecom, some of the names which Nimesh has got on his chatter list today. So keep an eye out on these names. Well, Mitesh is with us with what he'd wanted to do as far as trades go. Mitesh, good afternoon. What are the trades?
Yeah, good afternoon. So my sense is that I think, the market is slightly off today's high, mild weakness, but the stock-specific action remains on the positive side. So we'll take BTST calls. LIC Housing Finance is a BTST with a stop at 521. And would look for targets of around 535 here. And the other one is Keynes. That was a call, I think, yesterday or day before, I don't remember, but I think yesterday. And still doing very well. The chart is looking good. So we'll take a BTST here with the stop at 41.45 for targets of 41.95.
Okay, let's talk about Premier Energies. That's under pressure despite a bullish note coming in from Motilal Oswal. Vinny tells us, what's the overhang?
Hi, absolutely. So yes, in terms of the note that came in, it's a positive note. They've initiated coverage, target price of 1,000 rupees per share. They believe that this is going to be that solar scale-up that comes in for India's story, and Premier will be one of those companies that will see, and growth with that is with the solar industry going in the country as well. Now, obviously, in terms of overall, what is the overhang numbers in Q3 also? They were not that good. There was a bit of pressure that came in. They were below estimates. The management, though, has reiterated that they're going to see a quarter-on-quarter improvement in terms of revenue. When they spoke to CNBC-TV18, they expect capacity addition, but maybe concerns and delays in terms of utility scale is still a bit of a overhang for the company in the near term. Long term, like Motilal Oswal has also highlighted that, given that module cell capacity for the company is increasing, the diversifying furthermore into allied verticals as well, whether it's BESS, inverters or transformers. So they expect all this could be positive for them, but the near-term overhang seems like that the concern on utility scale side due to transmission delays and tender slowdown in the near term is something that is a concern, and they spoke to CNBC about that as well.
Thank you very much for that. Mayuresh Joshi is now joining in for the last leg of the market. Mayuresh, watching the T20 game or the markets? I heard there is a cracker of a match taking place down to the last ball between Afghanistan and South Africa. Three consecutives, yeah.
Oh, absolutely. In fact, the laptop is on one side and the television is on the other side. So I think, yes, can't miss T20. I think it's a stunner of a match as we are speaking.
Okay. Any stocks that caught your attention in today's trade? Lots of earnings reactions. What have you particularly liked?
So saying a lot of stocks are doing well today. So again, I think in terms of the earnings season itself, I think you have to pick sectors and leadership stocks which have probably done well and then probably delivered better than estimates. My own sense is that within the entire consumer staple space, Nestle India and V-Guard, I think these two stocks have given results which are far better than their peers and what the street was probably expecting as well. And the commentary going into Q4 has been equally strong. At the same time, I think a lot of banks, Rima, have given outstanding set of numbers, specifically the PSU banks. I think State Bank, the behemoth, even with a large base, is doing exceptionally well in today's trade. So in my opinion, again, I think select PSU banks have delivered outstanding set of numbers and valuations still remain reasonable and rating rankings for them look reasonably strong as well. As a space, I think budget, post-budget, I think data centers, and Prashant has been speaking a lot on that as well. I think that is very much in focus. And therefore, I think a couple of stocks which probably come onto our radar. We've probably not added that now, but still onto our radar. Cummins India is one of them. I think what Cummins is probably doing is the transmission norm changes which are happening in CPCB4. I think the transition changes are obviously going to benefit significantly. And they're deriving 40% of the revenues in terms of data centers itself, which can grow significantly higher with a nice run rate in terms of revenues, ROEs, ROCs at 25, 26%, ROCs in excess of 30%. And therefore, I think data centers, within data centers, I think ancillary plays like Cummins are probably on my radar. So I think a lot of good numbers that have probably come through across a lot of sectors where leadership stocks have probably shown strength.
All right, one more stock in the AI space is Fractal Analytics, last day today. And that's also one of the sponsors or partners of the India AI Impact Mission, which is taking place in Delhi next week. And last day, and I think the overall subscription is close to about 2.5 times, but retail HNI so far has been tepid. The push has come through from the QIB section, but we still have about 2 hours to go before we get the final thrust of numbers. Mayuresh, stay on. We need to slip into a very short break on that note. Still flat for the markets. Nifty Bank is now up 140 points.
Well, the markets are absolutely flat, actually. Even the mid-cap index as flat as can be in today's trading session. We're still in conversation with Mayuresh Joshi. Mayuresh, what do you make of Laurus Laboratories? You know, that's a stock, in fact, that didn't do much for many, many quarters. The management kept guiding that the next quarter is going to be better. And the stock spent a good amount of time between 300 to around 500 rupees. But from there, it just looked north. It's a 1,000 rupee stock right now. One of those outperformers. What do you like from that space?
Afternoon, Nigel. So I think both Laurus and DVs, I think specifically when you're speaking about Laurus, I think the kind of underperformance that transpired over the last few quarters, you're trying to see strength come back over the last 2 quarters. And obviously, I think management commentary and what it'll be guiding to in terms of better numbers in FY27, I think they probably look on the path to recovery. Obviously, I think as a space, this will continue doing well. Margins are relatively better. And as the CAPEX component for both Laurus and DVs, even DVs has a large component in terms of their CAPEX spend at the plant expansion that they're probably doing. A large part of that expectation is that the asset sweating and utilization should start being very, very reasonable in FY27. And with better realizations and better pricing, assuming to come through, I think the expectations in terms of better numbers as the management is guided for, seems to be a base case scenario. So I think a strong move is anybody holding should continue with it.
Mayuresh, earlier in the day, we were talking about Poly Medicure, how it was a darling, it was a big play on Make in India for the medtech space. But the stock has run through troubled waters. There is dumping in their renal business from China. Growth has slowed down. Have you all analyzed the company? And is it turning around, or do you expect more pressure financially?
So, Riba, no, frankly, I think out of our coverage as we speak right now, so very difficult to make a comment.
Anything in the jewelry companies across the board, led by a strong increase in the gold prices? We've seen a 40% kind of a top-line growth, whether it's Kalyan, PN, Guardgill, or even a Titan Industries. Do you like any?
So to begin with, I think the base case expectations itself are very muted, Rima. And again, I think the kind of numbers that have got thrown out, Kalyan, whether it's even Titan, I think the margin performance was reasonable at 10.4%. The started share at 26% for Titan. The expectations in terms of a very strong wedding season that is underway as in Q4, I think that will probably play its part as well. Even for Kalyan, I think there has been a significant tectonic shift in terms of margin performance as well. And they're reverting back to the margins that they probably enjoyed a few years back. A clear shift is probably being seen in terms of regulatory compliance changes from the unorganized market to the organized players itself. And therefore, these organized players are probably enjoying what we are seeing at this juncture. Q4 obviously will be a tad bit better because of the wedding season. At this juncture, I think Titan is something that we are holding in our global portfolios. In our swing portfolios, Rima, Thangamite Jewelers is something that we continue.
You know, the auto comms, right, is a I don't know if this is a theme or you want to call it, but just a few very large volume-led gains today. Lumax Industries, Lumax Tech, both are up sharply. Bellrise is up very sharply. Look at JK Tyre, which is going up big time. Rico Auto, and then there is Sansera, which is also up and about. So, yeah, I mean, so all in the auto component kind of space. Any thoughts here, you know, in the space of valuation? And what do you like? What do you own here, Mayuresh?
Prashant, with autos expected to do well in terms of volume growth, the OEM part of the auto ag business probably gears up in a far better position as we speak structurally over the next few quarters. What also abets them is the replacement market, where pricing and margins both are relatively better compared to the OEM space. And therefore, I think as a space, with the kind of product diversification that a lot of ancillary companies are doing, specifically towards EV agnostic products, I think they should start gaining both in terms of the ICE market as we speak right now, the hybrid market and the expected EV market as well. With not too much debt onto their books, I think a few of these companies might actually continue doing well. Our own sense is that tire makers, JK Tyres had a good set of numbers in my opinion. I think the kind of dynamics that JK probably has as we speak, commercial still account for a large bulk of their overall revenue or product mix. Replacement complements that as well with better margins. Their capacities here and outside India, Latin America, Southeast Asia, with a strong dealer distribution network. I think that should have better earnings going forward as well. Lumax had a very good show as we speak in terms of a margin performance on 9 months compared to last year, where there has been a significant improvement in the margin profile. And that might very well continue going by the management comments as I read through the press release as well. Last but not the least, I think FIAM Industries is something that we are watching out for as well. Our own sense is that the kind of product mix that FIAM has and the expectations in terms of a marginal improvement in cash flows along with margins going forward, a lot of products being introduced.
Okay. Okay, all right. Thanks a lot for that, Mayuresh. Lumax, you know, that stock went home with strong gains. LG Balkrishna, another stock that was up and about in today's trading session. From the broader markets, there were quite a few stocks actually that did quite well. Ashana Housing, another stock that reacted to its numbers. That stock was up and about. You had Man Industries, another stock that's corrected a goodish bit from the top. Rolex Rings, that stock in fact was up close to around 10% in trade today, as was the case with LG Balkrishna. I think PCBL has been making some positive comments on at some investor conferences, and that one in fact was higher in today's trading session as well. Sharp correction from the top. JG Chemicals, a smaller counter recycling play yet again, that as well has seen a good correction from the top. Today it was up and about. And Force Motors, it's feeling the force. Now a 25,000 rupee stock. In this month itself, the stock is up close to around 16%. So big up move is what we're seeing out there. Net-net, it was a day of consolidation. The Nifty goes on more or less flattish. The mid-cap index goes on more or less flattish. The Nifty Bank raises its bat and says, at least I scored a century. That's sort of a day. Individual stocks did a jig of their own. But we'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward comes up next.